Hello traders. This video is about trading the market around hotspot trading zone. Okay, this is a very important subject for anyone that is very serious about trading. Okay, because traders goes around and use all sort of trading systems and all sort of trading strategy, all sort of trading tactics, and they miss the most important thing in the market, which are the hotspot trading zone. Anytime you want to enter a trade, anytime you want to enjoy your trade, you must be able to locate and recognize clearly a hotspot trading zone. Okay, so the hotspot trading zone, okay, will attract, okay, a high volume. Okay, so you want to be part of that high volume, so to see the price moving exactly where you want it to go and to be rewarded quickly and very fast and abundantly. Okay, so if you were trading before and you do not know about hotspot trading zone, we are inviting you here, okay, to pay attention carefully, okay, and to master this subject of a hot spot trading zone. Okay, now on this chart here, I have a simple chart here of gold. This is the yearly chart of gold. Each candle here represents a yearly candle of gold. Okay, now gold will move in the same direction. Now this is the theory, and very often you will see gold moving in the same direction, like a crude oil, like Dow Jones, like a FTSE 100, like a CAC 40, like the DAX 30, like the major indices. Okay, you will see gold moving mostly in the same direction, like the Euro USD. This is what we call a market indicator. Crude oil is a market indicator, gold is a market indicator. Okay, Euro USD is a market indicator, S&P 500 is a market indicator, major indices are market indicator. So anytime you are about to swing trade or day trade, you will pay attention to the market indicator. You want to trade in the direction of the market indicators. Very, very important. So if you are using a swing trading system and you receive a signal to sell, but the market is going up, you will not take that sell signal, because you want to trade first the market, and then you will trade the sector, and then you pay attention to the leaders in the market. Now in this video, you know what is a market indicator, and we are looking at one here, which is gold. Okay, but the purpose of this video is about, okay, locating and recognizing, okay, a hotspot trading zone and how you can trade the market around, okay, a hotspot trading zone. Now we want to pay attention in this video to the hotspot trading zones here, the high, the low, and the middle of the range. Okay, so we're going to pay attention to the year 2007 candle here, where we have gold went up here. This is a candle here. We will draw, okay, one horizontal line at the high of this candle here. Okay, this is the high of the year 2007 for gold, and we draw another line at the low of this candle here of 2007. Our attention is on this candle here, and we will draw the middle line of this candle, also this yearly candle here. This strategy is applicable for the monthly chart, so you can do exactly the same thing for the monthly candle. You can do exactly the same thing for the weekly candle. You can do exactly the same thing for the daily candle. You can even do the same thing for the 4-hour candle. So we are applying this strategy of a hotspot trading zone to the yearly chart of gold here. So I draw my horizontal line at the high of this candle of 2007, and I draw another line here at the middle of the range of this gold movement in year 2007, and I draw another horizontal line at the low of this movement of gold from here up to this level here. You can see clearly that this level here is a very hot spot trading zone. The professional will note this level down. They will write it down somewhere. Very important. If in the future the price is coming near this zone, you will see that traders that if you are selling, for instance, in the future the price start going down, going down, going down. If it's approaching this hot spot trading zone, traders will exit the trade and new traders are likely to enter the trade. The key point to remember about the hot spot trading zone, these are decision zones. These are areas where traders are likely to exit a trade or place a new trade. These are the areas where you are likely to see a high volume. Okay, these are the areas where every trader will be ready to make a trading decision. This is about a hot spot trading zone. So a low of the yearly candle or any other candle, a low of the monthly candle, a low of the weekly candle is a hot spot trading zone. This is a hot spot trading zone. The high of this yearly candle is a hot spot trading zone. The middle line of this range of this yearly candle of 2007 is a hot spot trading zone. Okay, so you see clearly here that the second year, which is 2008, okay, you see here 2008 is the candle of 2008 of gold. You can see something very interesting did happen here. You can see that the price quickly went up first. Okay, it went up first and then tried to go down. Okay, I'll remove my thing so you can see I'm talking about this zone here. Okay, so the price tried to go down here, but when the price did approach this zone here, it did find a support because some traders that were selling as the price was going down and approaching this hot spot trading zone. How do they know? Because they did this strategy clearly, drawing their line on the previous year here, and they locate that this was a hot spot trading zone. They exit the trade here, and new trader came in here and bought gold again and bringing the price up again. You see the importance of locating a hot spot trading zone. This is one clear example here. You see, the price break this high here and continue the movement. It closes above it here. The second thing that you need to pay attention to, a hot spot trading zone also, is the closing price level here. This year 2007 the price did close here. This is also a hot spot trading zone. So the high, okay, the low, okay, the middle line and the close are hot spot trading zone regarding the yearly candle, the monthly candle, the weekly candle. Very important, okay, especially for the yearly candle. These are very important, a hot spot trading zone. Okay, so now we move to 2008. Okay, we will draw again our horizontal line at the high. Okay, here we draw a high. This is a hot spot trading zone, and we draw another horizontal line. Okay, here, okay, at the low of 2008. This is a hot spot trading zone, and the middle line, okay, happened to be exactly. Can you believe that the middle line of this range happened to be exactly the high of 2007? Okay, can you see that? The middle line of the year 2008 happened to be exactly the closing price level of, not the closing price, the high of 2007. I'll say that again. You see, this is the year 2008. This candle here is the year 2008. If you want to draw the middle line is exactly at the level of the high of 2007. This level here is what we call a double impact. This is a double impact hotspot trading zone, because not only it was a previous hotspot trading zone, it's become again another new hotspot trading zone. This is a double impact hotspot trading zone. The hotspot trading zone, the double impact hotspot trading zone are very, very, very important levels. Okay, for gold, that level is at 845. The levels, okay, the 845 price level, 845 is a double impact hotspot trading zone, because it was a previous hotspot trading zone, and again in 2007 it was a hotspot trading zone. In 2008 it was again a hotspot trading zone. If you pay attention to the year 2009, which is right here, okay, we will draw again our horizontal line, okay, around the range of 2009. Okay, we do the same exercise, okay, from here. Okay, so if you are paying attention, because you need to pay attention very carefully. So you see again the range of from this level here up to this level here. The middle line happened to be in the zone of the high. Okay, again the mid near. Okay, we can say that. Okay, so if you agree, okay, from here all the way in somewhere here, just below it, somewhere here. Okay, so this is the middle line of the year 2009, which is near the high of 2008. This is again another double impact hotspot trading zone again here. So I hope you understand clearly now what we are talking about, the hotspot trading zone and the double impact hotspot trading zone. As you can see, in 2009 the price tried to go down. Okay, people were selling. Okay, as soon as the price was approaching this level here, okay, was the high of the previous year. Okay, as the price was approaching this double impact level, which was the high of 2007, the middle line of 2008, this level here, where I'm moving my line here, as soon as the price was approaching that level, some traders that were selling exit their trade, and new buyers came in this zone here, and the price did find a support at this double impact hotspot trading zone, and the price continued movement to the upside. Okay, so you see the importance of this double impact hotspot trading zone. Okay, in 2009 the price was a hotspot trading zone, a double impact hotspot trading zone, and people bought it big time here, and the price continued the movement to the upside, moving up. Okay, so we have the middle line of 2009, which is again near the high of 2008. Okay, very important. Okay, this is the high, or this where I'm moving my cursor here, this horizontal line, where the red horizontal line is the high of 2008. Okay, the middle line of 2009 is right below that level here. So this zone here, we can say, is a double impact hotspot trading zone. Moving up, we are now in 2010 for this gold. Okay, and we can draw again the line around the range of 2010. This is 2010 candle. Okay, this candle here is 2010. Okay, as you can see, this is the high here and this is the low here. What has happened is that first the price did open here. Okay, the price did open here, so the opening point of the price is also a hotspot trading zone on the yearly chart, monthly chart, weekly chart. The closing price level also is a hotspot trading zone, but we are paying attention to the high, the low, and the middle line, which are very, very important hotspot trading zone. Okay, so now you can see that in 2010 something very interesting was happening. The price did open here but tried to go down, approaching our double impact hotspot trading zone. People bought it big time here, as they did again here in 2009, another double impact hotspot trading zone, and the price went out. Here in 2010 the price was approaching again a double impact hotspot trading zone, and they bought it big time, and the price went up big time. Now this is the 2011 now. This is the 2011. Okay, this was happening here. This candle is not completed yet because the year 2011 is not finished here, but currently the low is somewhere here where I place my red horizontal line, and the high is at this level here. We cannot draw them now because this candle is not completed yet, but as you can see, the price did open below, okay, the high of 2010. Okay, it opened here. Okay, this is the opening point. Okay, below the high of 2010, and tried to go down. Okay, and when it was trying to go down, okay, it came near the low, near the middle line. This is the middle line. Okay, am I telling the truth or not? This is 2010. It's a 2010 candle. The middle line is somewhere here. Okay, if you are following me. Okay, very important, because your concentration must be very high at this point, because this is the year 2010 from here all the way down here. The middle line somewhere here. Okay, in 2011 the price did open here. Okay, try to go down, approaching the middle line of 2010, which is another hotspot trading zone. The price did find a support even before touching it. Okay, and continue the movement to the upside. Now we are above the high of 2010. This level of the high of 2010 is a very crucial and very important hotspot trading zone for this year 2011, because the price is near that zone. If the price turn around and close below the high of the 2010, that will be bearish. But if you remain above the high of 2011 or for 2010, if you remain above the high of 2010, that will be completely bullish. Okay, so we are watching carefully. This gold also is near a hot spot trading zone, which is the high of 2010. Okay, this is on the yearly chart. We'll move on quickly to the weekly chart, to the monthly chart first. Okay, this is the monthly chart, or the line that we have drawn on the yearly chart are here. You can see here, if you knew this strategy before, on this monthly chart, the price was going up, approaching this double impact zone. You see it turn around fast, come back and retest another hotspot zone, and continue movement to the upside. Came here first, touch again this hotspot trading zone, the monthly chart, come down, went up, okay, went above it, okay, it break above it, and come back and retest the double impact level on this monthly chart. Continue movement, hit another hotspot trading zone, and then find a resistance there, come down, find a bit of support, went above, and now again here. Okay, so you see the importance of a hotspot trading zone in order to achieve consistent winning trend, in order to navigate, okay, through this messy market. You must be able to understand, okay, the subject of a hotspot trading zone, how you can use that in your trading, that you may know exactly when you can exit your trade, what kind of activity is happening here, because you know that some traders have a high probability to exit their trade here, and new traders are likely to enter the market at this point in time. This is the gorgeousness of a hotspot trading zone. This is what we see on the monthly chart. Going to the weekly chart, okay, we are now looking at a weekly chart. Somebody looking at a weekly chart who has drawn the hotspot trading zone from the yearly chart will see something like this. On the weekly chart, you see how the price is moving from one hotspot trading zone to another hotspot trading zone. From here, it hit it here, come to this hotspot trading zone, come near this one, come back down, hit it again here, went above it, okay, come near this one, come back down. You see how the price is moving from one hotspot trading zone to another hotspot trading zone. Another middle line here of this channel, from here to here, the middle line of the channel is also a hotspot trading zone, as you already know. Okay, and then it move again from here, where all the way again another hotspot trading zone. I mean, this was the high of 2010. Okay, that's where the year has ended. 2010 has ended here. Now the price come down a little bit. You see here, we are now again in a hotspot trading zone for gold. Okay, so this video is about how you can trade the market around the hotspot trading zone. Moving on to the daily chart, you can see clearly now that gold has broken this the high of last year. Okay, and it's clearly bullish above this high here. We'll monitor carefully because we know that it's going up, but it's still near the hotspot trading zone, so you are trading cautiously. Okay, very, very important. And also, if you use the strategy of projecting the channel, one channel to the other side, if the price break one channel, you must project equal measure of the channel to the other side, okay, in order to locate a new target that you may look up to. Okay, so looking now to the 4-hour chart of gold, what is happening here, you can see that the price did consolidate here, you see, because this was a hotspot trading zone. When the price is approaching a hotspot trading zone, the price will slow down because some traders are closing their previous trade and new traders are coming into it, creating a kind of congestion because we have too many traders in one particular zone. Okay, this is a decision zone, so that's why create a congestion. You are likely to see a congestion at a hotspot trading zone, or the price slowing down, or the price turning around. You are likely also to see a reversal around a hotspot trading zone. So this is so important for traders to pay attention to the hotspot trading zone and to know how to trade around the hotspot trading zone. For those who are using the TSTW24, the TSTWSY S08, or the TSTWSY S008 trading system, you will clearly use this hotspot trading zone together with your trading system in order to cream the market consistently. This video is about trading the market around the hot spot trading zone. For those of you who are new to us, we are the TSTWSYS08 traders, and our website is www.stochastic-macd.com. Thank you for watching, and speak to you soon.